start with the presentation. It's very short. It's just providing some data and charts where then later our speakers, our industry specialists will discuss more in details. Okay. You have seen this chart. I'll have to go very fast. The point is we're talking about GBA area which has a population around 67 million, basically 5% of China population. However, 20% of China GDP is produced in this area. And the other point I'd like to make here is, as you see, is quite red, which means that urbanization is very high, which means that density is very high. So population density is very high, coupled to the climate risk, makes it a time bomb for economic losses. That's MSCI 2018. They do stress test scenario on a potential economic loss due to physical plus transition risk for various regions should the climate warm 2 to 2.5%, sorry, 2 to 2.5 degrees or 6 degrees warming scenario. Should this scenario happen or the 6% warming scenario, you see in both cases, Southern Asia, where GBA is situated, is very high, meaning the potential economic losses are around 14–16% of the GDP. Okay, so that makes it very substantial and that gives a warning signal for the area. This is just economic losses without looking at social losses, social risk, without looking at migration, disease, and other risks. So the potential economic loss will be even higher. So it's just an underestimated value. I was playing around with a couple of risks which GBA area is facing. Obviously, don't take it 100% solid. Might be some politically incorrect risk. But if you put it in terms of color code, environmental risk, such as sea level rise, water scarcity, flooding, pollution, is high in the area. For this risk, I think you can talk to the China water risk, and Deborah Tan is here. She can tell you that water scarcity in Shenzhen is half of what we have for Pakistan. So it's quite alarming. Then in terms of, you can talk about social risk, which are more related to housing shortage, especially Hong Kong. Social risk due to aging population, so you have an increased dependency ratio, you have healthcare costs related again to a population which is getting older quite fast. Then you have some other risks which are more on the education side or agriculture, if you want to put it, etc., etc. This table, we saw it before. I'm not going to stop here because Professor Alex Lau gave you the numbers where Guangzhou relates to other Asian cities in terms of economic loss, or if you want to look at average annual loss per GDP is 1.4. This is a risk management criteria used in the insurance industry. So, and it's like 7 times the Jakarta level. So Guangzhou faces a large economic risk. So what do we need? We need to finance the economy moving from high carbon to low carbon economy. If you break it down, there will be energy, transport, land, and adaptation. The breaking down depends on who is providing it, but here I would like to focus on 2. Energy. Energy, you have renewable energy and you have energy efficiency. So far, we know that China is a leader in renewable energy. Overall, most of this financing comes from companies which enjoy a monopoly or corporates which are state-owned enterprise or government-backed corporates, government-backed entities. And they can easily access green bond market. So they are able to access, to raise funds, whether it is brown or green, but they choose the green because there is need for green finance. I think I have to skip it. You know that China green bond market is very big. It's around $32 billion US. It's almost 1/3, roughly 1/3 of the total green bond market worldwide. In terms of proceeds, this is proceeds which aligned with international definitions. Okay? Because the proceed will be the name will look different if you look at NDRC or if you look at PBOC definition. However, I compared the 3. The distribution is more or less the same. From energy to low carbon to water to waste to adaptation. One area which needs more funding is energy efficiency. Because as the chart I show you above, energy efficiency is where we need to put more money in. In terms of green bonds performance, who has been raising green bonds in China? These 75% of the green bond issued in China are AAA companies. They have low probability of default. They tend to be SOEs as well. Right? Performance is mixed. I think about performance we can talk later as well. Whether there's a premium coming out of the green bonds or not, general opinion is there's no premium. If there is, it's very small. It would not justify the use of the green bond per se, or the issues of the green bond per se. Okay. I come back to this chart. Why? Because energy efficiency is one area which needs to be financed. The problem with that is that around 40% of that segment is owned by the small project, it's owned from individuals. So we call it small project holders who cannot access the green bond market, and therefore they need banks to provide them green loans. Banks, on the other hand, they need to have a very clear pipeline of green assets. So it's all becoming green. You have green bonds, then you direct it on green loans, but to have green loans, you have to have a clear definition of what are green assets. With that, I would like to conclude these two. Number one, instead of making the green very narrow and standardized, we need to expand the green definition, be it in the same line with Professor Fu. Number two, we need to price the green into the stocks or bonds. And that goes again with China going to green accounting, because only if you price the climate risk, you know how much, what's the value of your green. Then you can lower your borrowing costs, and then you can assess whether that company is actually green. So it has to be priced in the green assets, it has to be priced in the green bonds, and it has to be priced overall, because every asset is green, every asset is bond, but to a certain percentage. It cannot be green versus brown. We just have different shades of green. And the third one, the role of Hong Kong. I need to provide, as I said, a very structured, a very clear definition of what projects are on the pipeline for the banks to finance and the corporate bank. The last one that I think Professor or Dr. Calvin can explain is not just about green finance, it's about social impact bonds. It's also about sustainable bonds overall, right? Because the risk we're facing is not about just climate risk per se. It's much bigger and much wider than that. With that, I think I pass the microphone to the other speakers. Thank you.